Welcome to this Killick Explains video, and welcome to number 2 in my 4-part series honing in on dividends specifically. And if you're wondering where the context for this is, it's the previous series on different sources of income, one of which was shares. So there is a method in the madness, as it were. Now, why are we talking about income? Why are we talking about dividends? Well, dividends are a great source of income, and in the current climate, with inflation rising seemingly all the time, people do need income day to day, and they also need it if they're dialing down work and so on. So in video 1 in this 4-part series, I talked about what dividends are and why they can be a potentially good source of income. Here, I want to talk about what can go wrong. Now, I'm not saying this should put you off dividends, but I am saying it's not good enough to just go, there's a company paying a generous dividend yield, I'll buy that. All right, because apart from the single stock risk, things can go wrong with dividends. So I think investors should check 2 things. Value is one and reliability is the other. And I want to talk about both just now. So the value trap. High yields are rare. Now, in an environment where a typical bank deposit, as I make this video, spring 2023 if you like, a bank deposit might offer you, say, if you're lucky, maybe 4%. So if a dividend yield on a share, that is the annual dividend divided by the current share price, is double that, you might think happy days, especially with inflation even higher, but be careful. High yields, way above the market average, are rare, okay? So you need to be a little bit organized in terms of how you approach them. All right, because what's going to happen is people are going to spot a high dividend yield. They're going to say inflation's 10%. Wow, look, I can get 8, 10 or 12 off this stock. So people are going to pile in, okay? They're going to be a popular stock to buy, if you like, and you can end up with a very crowded trade. All right, so even if you can rely on the dividend, be careful because you might be paying a lot to get hold of it because everyone else is chasing the same dividend payer. That's what I mean by a crowded trade. So, does this represent good value? Question number 1. Number 2, actually, is it even realistic to expect this yield to continue to be paid? There's a thing called the unreliability trap, as I call it, which is where dividends, which after all are decided by the directors and only ratified by shareholders, which means confirmed, doesn't mean decided on, the directors could cut a dividend and they can reduce it. And some of the biggest dividend payers in the market, going backwards, BP, M&S and so on, have cut dividends or even slashed them completely, and that comes as a shock to shareholders. Okay? Directors may also decide to reprioritize. Although they're under pressure from shareholders to maintain dividends, they may decide actually we want to prioritize capex or something else, and the dividend gets reduced, leaving aside any sudden shock events that force them into cutting the dividend. So what kind of tests can we do as an investor, or what kind of tests should someone be doing on your behalf if they're buying dividend stocks for you? If you're looking under the bonnet, kicking the tires on an income service, for example. Well, dividend history is crucial. Does this company have a history of paying dividends, or have they suddenly gone for a one-off bribe to try and get people to buy the shares, if you like? Look backwards. What are the company's promises versus delivery like? In other words, if the directors commit to something, do they deliver it? And that's important for dividends just as it is to other aspects of running a business. Do we have cover for the dividend? How many times could the dividend have been paid out of profits, that's earnings cover, and out of cash flow, that's cash cover? And those are 2 separate calculations. And if you see weakness or a deterioration, watch out. And the cash flow statement itself. People often focus on the profit and loss account, look at the earnings number, look at earnings per share. What about dividends per share? What about cash flow strength? Is there evidence that this is a company that generates meaty operating cash flows and can therefore sustain its current dividend policy? Okay, now a few twists. All right, and by twists I mean things to think about in the context of dividends and dividend safety. So, number 1, what alternative sources of income do I have available as an investor? Am I going to chase dividend yields, the crowded trade, or could I look at bonds as an alternative, for example? And for emergency rainy day purposes, perhaps I'm looking at cash or even an ISA, all right? Reinvestment is another twist. In other words, people will often say, I need my shares for income purposes, but actually is that true? Could you reinvest dividends over the long term and then look for a strategy of drawing down a mixture of capital and income. In other words, these days it's probably unrealistic to just sort of cream off a natural yield like people used to do in the old days. They say, no, the capital is the capital and the income is the income, so the dividends are what I need to live off and the capital is capital. That's a little bit blunt and quite difficult to achieve, whereas a drawdown strategy might yield you, for argument's sake, 4 or 5% from a mixture of dividends and a mixture of capital. And what other sources of income do you have available? So, in other words, don't obsess about dividends and dividend yields. Be a little bit flexible and creative in terms of the way you view a portfolio when it comes to income generation. And finally, keep an eye on the tax rules. Already, we've got cuts coming to the dividend allowance. That's the amount you can earn tax-free as dividend income outside an ISA, outside a SIP. Okay, and watch that space, because with a Conservative government, without going into the politics, that doesn't seem keen on tax cutting, and with a possible Labour government in the future, tax rules will become more and more important. Now, I've covered a lot of ground there. Okay, if you want to find out more, then do access killick.com/learn. That's my comprehensive dividend library. There's a shares tab. That's quite a nice place to go. There's also a guide. It's this one right next to me as it happens. Here's one I prepared earlier, as it were, called How to Invest in Equities. That has some written information on dividends. That's editor@killick.com. And occasionally we do talk about dividends, naturally enough, within Confidant. That's the darker blue cover magazine, quarterly magazine. It's got lots of good stuff in it. I would say that because I edit it. And that is also editor@killick.com. And finally, this is video 2 in a series of 4, so that means there are 2 more to come.